What's up, guys? It's July 31st, 2025. We kind of had a trend day today. It was a broad bear channel. The bulls were making money, so I wouldn't say it was a full-on trend day, because if it was a trend day, one side wouldn't be able to make money, but bulls were making money today. Had a pretty good day. I did all right on the futures account. Took a couple of option 0 DTEs. On the futures account, I scalped this leg. So okay, we're gonna go over futures and then the options. On futures, I scalped this. Give me 1 second here. Okay, I wanna trade this thing, but on the futures, scalped 1-to-1, and then I caught this bar 1-to-1, and then I didn't get stopped out, honestly. I was pretty confident with this trade here. So I got filled here, and then I moved my stop up to this swing, and I took an extra contract on the futures account, and I scalped out on the green line here. So I had 3 winners, but the last one I kind of jerry-rigged it. I moved my stop and had to scale in. On the options account, I shorted this bar. I shorted the same pullback right here, and then I shorted the breakout, and I took profits here on this leg, and then that was the day. Did pretty good on the options account. Had probably one of my bigger days in the market today, so I'm gonna take it easy tomorrow and just digest this win. And let's do the breakdown. It's gonna be a quick one. Got off work pretty late tonight, so apologies if you see the time. It's usually I like to post these like a couple hours after market closes, but nonetheless. So bears got that leg 2, leg 1, pullback leg 2. I talked about it yesterday. The problem with this leg 2 is that the leg 2 went above right here. So leg 1, pullback leg 2, except it was a deep pullback, and it was so deep it actually went above the breakout point for the bears. But then it reversed down. So depending on how they trade, some traders will have their stop 1R and they're still in. Some traders got stopped out and would have to think fast and short again. But leg 1, pullback leg 2, bulls buy up here, the market sells off, they're trapped, they're going to buy more. They actually made money, so that we can't see the bar, but there's a bar here, a bull bar. There's bull bars up here. So we know that we're in a trading range because bulls made money. And it sold off, vacuum down to the leg 2 target, leg 1, pullback leg 2. That's the move I took advantage of. I do like to trade leg 2s, and I've been trading leg 2s for about 1.5 years now. I started at the beginning of last year. And it's really interesting to see how it's developing because price action is fractal. So the correct concepts can be applied across all time frames. One concept is the stock market is fractal. That's you kind of have to believe that and do your own homework to start to really let it soak in. And the second one is building a system around first principles. So you can build a system around, is the market breaking out? That's the first principle. And the second first principle is the market reversing. And as long as you stick to those 2 first principles, you should be okay. Generally, I mean, you're going to have filters. You can't just, there's still caveats to that. Saying you're going to be okay is bad. You want to build a system based off those first principles and then add the appropriate filters as you go on and backtest. So, where am I even going with this? I guess what I'm trying to say is that it is beneficial to trade a system and backtest and do your homework, because if it wasn't for understanding the market cycle, I mean, we've been counting these legs almost every day. I count third leg, leg 1, pullback leg 2, pullback leg 3, pullback leg 4, or you can restart the breakout, or I could say leg 1, pullback leg 2, pullback leg 3. There's a hidden leg in here because remember yesterday's price action sold off and then rallied. So there's many ways to do this, but what's important is we're in that third push. So, and I kept saying, I was like, hey, bears are finally getting bars in a row. This is a micro channel down. So all that came from just understanding one concept, which we'll all know that's not true. It's understanding market cycle and leg count, and then I add gaps as a little extra like flavor. Anyways, yesterday, rough day, expanding triangle, big sell-off, big rally. That's this. When I said they got stopped out, that's this trade right around here. Failed around yesterday's high. Man, we actually have been in one big expanding triangle. Look. Wow. I don't even know where the other. That's pretty nutty. That's pretty nutty. I do not like expanding triangles. I'm pretty sure I find a way to say I don't like them at least once a week. They are breakout traders' bane. I'm getting a little bit better with them. I hope you guys are too. Anyway, so we gap up, failed. I was just looking at NASDAQ, and NASDAQ was a big bear bar, so I was like, okay, that's good for a reversal. 1 second. So we have a rally, we have a gap up, and a bear bar. Not good. Bar 2, bear bar closing on slow. Not good for the bulls. And then bar 3, small bear bar has a tail. This could be a first reversal. Leg 1, pull back leg 2. But I was watching the overnight session, and it felt climactic. See, gap up, and then here's that channel, and then that puts today's opening more of a trading range open than see climb. I was watching this, like I randomly wake up and watch the stock market. I watched this move happen, then we just started going sideways. I fell back asleep right around here. I woke up again and just watched saw the context that we've actually been. 1 second. Sorry, I had something in my throat. So rally, pullback, channel, climactic price action, trading range behavior, and then that gives context for today's breakout actually being that. So today's price action was the top of a trading range. But if we only want to use the RTH session, that's fine too. Climactic rally, make a new high, bad gap up, bad follow through, and bulls do get a leg 2. Leg 1, pull back leg 2. Bar 6 goes above here. So they do get that leg 2. But then they get bad follow through. Man, I've got something in my throat. Then they get bad follow through and the market starts to spill over. Once we see 11 through 16, that's what 11. Well, you can no, that there's just bar 9 is a bear bar, but bar 10 broke the high of 9. So, and I'm counting this as one trend line, but bar 13 is a trend line break. 1, 2, 3, 4, 5, 6, 7 bear bars in a row. Showing off to get a leg 2. This is not what the bulls want to see after a rally like this, and then we see a breakout bar 17. That breakout bar is where I started another short position. I think I shorted it like as it was moving down. I like the context of it. And then 18, good follow through. 19 is a pullback right above support. And then we get breakout 21, 22, 23. 3 bear bars in a row. Once I saw 21, I thought that was a good follow through to get another leg lower, but I ended up getting trapped on this rally up. And that rally up, I was sweating a little bit because I thought it was a 50% pullback, and then my options account was going to get crushed, but I held short through this, which I'm not happy about, and then it worked. That's what I'm on the fence about options about, is that if I could take profits here and then trade options up and then short again, that'd be great. But with options, I'm almost forced to hold through things like this, and that's what makes me not comfortable. So that's why I'm gonna take a little break and just digest this win. Starting in August, so tomorrow, I've been trading for 4 years. It's pretty crazy to think. So nice little reward here. Maybe I'll go out for a celebratory beer. I do like drinking beer and wine. I don't drink all the time though, but maybe tomorrow. We'll see. It's Friday. We will see. So bears get trapped on the high of 19. Excuse me, bulls get trapped on the high of 19. They're going to buy more lower. The problem with this is they made money because look at 24, 25, and 26. It's a reversal. A reversal is a form of a breakout. That makes 28. First reversal down. It's likely to fail, and that's a good buy. The bears at short 28 and 29 are now trapped, and they're looking to get out at break even. So they short higher. They get their break even on 31. They get their break even on 32. They exit buying back shorts, and the market goes for a quick rally, creating 2 to 3 legs higher. Leg 1, pull back leg 2, pull back leg 3. That's a wedge top under resistance right around the breakdown point, and then the bears got the party started. What causes a trend to happen is one side is consistently getting trapped. So if the bulls were getting trapped thinking this is a rally, they're going to keep selling out of shorts. And what is also, I think, important for people to understand about trend is you also want bears to be trapped. I know that sounds weird. Why would you want bears to be trapped out of a bear trend? Because then it forces them to short lows when the market keeps going. That's what that constant tension between bears chasing the market and bulls getting trapped selling out of longs is what causes a trend. It sucks that they made money here and it wasn't an all-day trend, but nonetheless, it was a form of a trend. It was a broad bear channel, and it acted as one. As soon as it came up to resistance, sold off. Bulls made a little bit of money into resistance. The EMA sold off. So can't complain. Bulls are going to be buying up here. Let's say the poor bull bought 39. Okay, so he's able to get out here. Let's go down to the next bar, 40, 43. So if the bull that bought here quickly buys 45, he has a moment to get out of break even, and then starts to sell off. I don't think the majority of bulls are going to be fast enough for 45, so they missed their exit. They try and buy more. And look, guys, the bulls that thought this was going to rally off the support level, look, they don't ever get out of break even, so they have to sell out for a small loss. Some bulls would quadruple their position and they're going to make a little money, but the majority of bulls will buy one contract, and aim for the 50% mark. They don't get that, and it creates another leg down. Now we have a new set of trap traders because there's a bull channel right here. All right, guys. So I'm going to speed this up a little bit because I still got a little bit of homework to do. I want to go to sleep too and wake up early. Bulls get trapped here, sells off again, misses the 50% mark, and that causes another leg down. Now, don't get caught shorting lows, 3 legs lower. Leg 1, pull back leg 2, pull back leg 3. And the 58 becomes a reversal bar. Leg 1. Now, you could be asking, why don't we say bears got trapped here? We're under the EMA. We've had so many bear bars below. All bull gaps are closed. It's bear gaps galore. I need to make that gap indicator. I keep talking about it, and I'm just I always thought trading would give me more freedom, and somehow it's doing the exact opposite. There's not enough time in the day anymore. I had this cool analogy. I was talking to a friend. I just popped into my head. It was a couple of weeks ago actually. We were talking about, I don't know how we came up on the topic of jail. We were talking about trading psychology, and then somehow the topic of jail came up. I can't remember the exact conversation. And then I started thinking about it, and I was just bouncing ideas off of him. Like, yo, how crazy is this? We try our best to avoid jail, and then the majority of the traders I know are trading for freedom. They want to have more time. But somehow, think about this, okay? Check this out. These bars, what's the difference? If we're never going to enjoy the money we make and have freedom, we are still staring at bars. You sit in a jail cell and you're staring at bars. You sit at a computer screen and you're staring at these bars. We're still trapped. It's just, I don't know why I went on this, but I just want to hear you guys' opinion if any of you have made it this far. Even though we're not in jail, we're sitting behind bars for 12, 13 hours a day. I'd make it a habit to get sunlight, but I'm sure maybe there's one person in the world that goes outside for an hour a day. So there's his yard time. And it's just crazy to me. I was like, wait a minute, we do this for freedom, and I still got stuck behind the bars. So yeah, that's that. I don't know how, I gotta listen to how I went on that topic. Anyways, so bears get trapped down here. And now you might be asking, how come the leg 1, leg 2 doesn't work? Well, the problem is we're in a bear trend. I kind of remember now. We're in a bear regime below the EMA. Look at all the bear bars down here and all the bear bars down here. Oh, now I remember how it came about. So when bears short here, they're confident they're going to at least get back to range lows because it's trading range. So if this is the range low, they're confident it's going to get tagged again. And it does. So they short more and they make their profit. I want to see something here. Oh yeah. You guys remember I said I need to do a back test? If there's a leg between 7 to 9 a.m. PST, how many times does it get 50% pullback and reach 1R? Look at today. It worked again. So it's not a common setup, but I need to get real numbers behind this trade because this could be a this could be a good way for me to trade options, like size up heavy, like look for a leg for 7 to 9. Very visual, very time orientated back trade. Only 7 to 9, and then I look for that pullback from the next 1 to 2 hour window, and I just short to the recent low. So leg one, pullback, leg two. It worked, and I saw it again today. And I was like, wow, I really need to do some homework on this because this could be a swing target. I could be scaling all the way in. Anyways, so now let's do one more exercise. So 64, bulls get trapped. They buy more on 66. They get out on 67. Leg one, leg two, 69. 69, leg one, pullback, leg two on 69. All right, do it again. The unfortunate bull is trapped on 67. Sells off. Look at 71. Tags the 50% mark. Bang. Leg two on 72. Leg one, pullback, leg two. And then there's one more study I have to do is not taking the third signal in a row. I haven't done that, but I got it next to me written down on my notepad. But let's just see. Third signal in a row. Bulls buy the high of 70. They get trapped. Exit here. Oh, wow. This was a 1 bar trade. So it worked. It worked, dude. That's 3 trades in a row, though. So it is a bear channel day. It would have worked. All right, guys. Hope you enjoyed my rant here. I know today was a little bit faster. I'm going to do some homework. I'm in this trade right here. I'm looking for a nice leg two down. And my stop's right here, but I just put it above the swing. So we'll see. It's kind of turning around on me. I still think I can get out right around down here. The problem is the bulls have a rally. So actually, let me see. Yeah, my early exit's this line because that's the bull entry for leg one and leg two for the bulls. So bulls are going to buy back here is what or bulls are going to get bears short down here. They short more here. They're going to get out here. And that's trading range behavior. Big down, big up. So we'll see what happens. I do think we'll go a little bit lower just because of the day. There's a lot of bear momentum. But yeah, anything can happen. This could be a deep pullback and we rally and I get stopped. Well, I'm not going to let my thing get tagged, but yeah. It's not going. Anyways, guys, thanks for your time. It's late. Hope you guys have a good night. Hope you guys are sleeping well. I will talk to you guys tomorrow. Good night. If you learned something, share, show. Don't be a hoe. Bye.